Okay, welcome back to another episode of Banking Without Borders. So today we're going to do a full Cash ISA deep dive, dedicating the whole episode to ISAs for the tax year 2026-27. And rates are so competitive right now. But there's also some headline numbers that I think look better than they actually are, especially when you read the small print. So we want to make sure that you know the differences and the details before moving your money. And we're going to cover the best easy access cash ISAs, the best fixed rates, how transfers actually work, and we'll spend some proper time on two accounts, eToro and XTB, because these are generating a lot of attention right now. All the rates we discuss in this episode are correct as of today, April the 13th. And if you want the latest, most up-to-date numbers, head to depositscout.com, just filter for Cash ISA and everything is right there. So yeah, some of the ISAs that we're going to talk about today are flexible and some are non-flexible. So should we begin with just clarifying what that means?
Yeah, Johnny, so the difference is really simple. A non-flexible ISA would consume your allowance if you withdraw money from it. Let's say you put 20,000 pounds in, take 5,000 pounds out. You cannot put that 5,000 pounds back in the same tax year and benefit from that allowance. And a flexible ISA doesn't have that restriction. You know, it's flexible, can move money in and out. You'll keep your 20,000 pound allowance.
The headline rate is flexible, and that's eToro at 4.78%. Now, this works differently to a typical cash ISA, and I'll get into the nuances shortly, but there's also another rate on our table, which is 6%. That's XTB, and I know a lot of people have mentioned this to us in the comment section. It's a very popular headline rate at the moment, but we haven't put it at the top, and for a special reason, which I'll discuss with you shortly. But first, eToro. Now, this is very interesting because it works differently to a normal cash ISA. With a cash ISA, the bank is essentially paying you. You deposit money, they lend it out at a higher rate and pass a slice of that back to you as interest. This is pretty simple. With eToro, your money is actually invested into a qualifying money market fund. Now think of this like a very boring, very cautious investment fund that gets lent out to governments or to large financial institutions on extremely short term. So I'm talking days, maybe weeks, but not years. And now those borrowers, so those governments, for example, they have to pay a return, and that return on that loan is passed back to you. These track the Bank of England base rate. So in practice, they behave a lot like interest, but technically you're receiving investment returns rather than bank interest. And I think, Jan, for most people, this distinction doesn't really matter at all. These funds are tightly regulated and the risk is genuinely very low. And the difference is only really in how deposit protection works, or FSCS protection works, I should say. Because with a bank, when you're depositing money into a bank account, you're treated as a depositor and you get £120,000 protection. With eToro, you're treated as an investor. So you receive just £85,000. I think that one catches people out. It's not going to be hugely impactful because a cash ISA is of course limited to 20k. Now the 4.78% rate, Jan, this is quite interesting. There are essentially two layers to this. One is the underlying rate of roughly 3.75% and also a eToro bonus, which they've added on top as a promotional offer. Now what's important to know with that bonus rate of roughly 1%, that could change at any point, and I think that's the real rate risk here, Jan. It's worth saying that this is just like any, in some ways, any bank product, right? It's variable. Those rates can change at any point. And so could this eToro rate. And also, I should probably mention, Jan, the last thing to flag, I promise I'll stop talking. This is essentially a marketing funnel, right, buddy? They are trying to push people into their investment app because this is an investment platform. And this Cash ISA exists inside this investment platform app. I went through the process of signing up, Jan. It was a really interesting sign up flow. For those that are watching, I'll pop it on the screen. There are questions around what sort of investments do you want to do? I think I had to fill out a W8-BEN form, I believe they're called, the tax treaty form here in the UK with the US. And that's typically something you fill out when you're signing up for investing. I think what you've got to be careful is when you go through this process is A, getting frightened because you feel like you're going down the road of investing. Well, you're not, you're just signing up for eToro and eventually you can find the option for Cash ISA. And two, don't make the mistake that I've seen some people make, Jan, where they're signing up for stocks and shares ISAs accidentally instead of cash ISAs. So if you're signing up for your cash ISA and you see like crypto or trading or CFD options, you probably are amongst stocks and shares. So just double check where you are and where you land and make sure that you're signing up for the cash ISA. And of course, I think, Jan, you say this all the time, you just got to be wary that you don't end up investing all of your money, right? Because you're on this investment platform.
Exactly, Johnny, and that's where the risk is. You know what I find fascinating personally?
Go on.
If you look at this table of the top rate, the top three, we know already, those are investment platforms.
Yes.
Quite surprising that they are flexible allowances, right?
Yeah.
So it's in their interest. It's in their interest that users put money there. You know, let's say they deposited £20,000 thinking they will accumulate some savings, and then it works really well, right? They might get the taste of it, and then start using these other investment products that these platforms obviously have to offer. And that's the whole point of why they're offering that in the first place. And you don't have that with normal bank institutions. These are typically non-flexible because they want the money to be kept right in the account. They don't want you to move it there and then move it away once you get a better rate.
And that's what we've got at the top. Trading 212 at 4.62%. That's a tracker rate which moves with the Bank of England and it has a bonus of 1.08%. Then eToro at 4.78%. That's a triple access. So that rate I've just been talking about. Take money out more than 3 times, and if you do, the rate will drop to 3.48%. I think that's fine for most people, but it's worth knowing. And then XTB, that trading platform at 6%. But that 6% will only last for 90 days. Because it's a 2% bonus. But it is worth knowing about this account, Jan. I'll go into a little bit of a detail now because I think this is important because there are a couple of nuances. So after 90 days, important to note, that rate will drop to 4%. And if you do the maths across a full year, you're looking at a blended rate of 4.5%, which is still very competitive, but that's a long way from the headline of 6%. XTB is also for new customers only, and you need to open the account before the 30th of April 2026 to qualify for the boost. So that window is closing. Structurally, though, this is closer to a traditional cash ISA than something like eToro because your money sits in segregated accounts at class 1 or tier 1 banks. I should say, if you're wondering what a tier 1 bank is, think Santander, UniCredit, pretty safe financial institutions where in theory your money would be held and be safe. And as a result, you also get FSCS protection up to 120,000. What I think is happening here, Jan, XTB is passing on the interest that they're earning from the deposits inside those bank accounts. I think they're passing that on to the user. And I think the promotional rate of 2% is a cost that they're absorbing to use as a marketing vehicle. Neither Jan and I have this account. I did sign up for eToro. I haven't signed up for XTB. So I'd love to hear from anyone that has, if you can share any insight into how it works. Neither one of us are big fans of the marketing around this. I do think that it's quite clearly a vehicle to push people into investing. And that's fine. But as Jan mentioned, you've got to be cautious about this. But do please share with us if you have any insight or any feedback of XTB.
I'd like to add a note here, Johnny, as well. Looking at their website, I get mixed feelings. You know, you have Zlatan Ibrahimovic holding a trading app into the camera. It all feels a little sketchy to me, you know. And you have all these sports athletes, you know, these professional athletes that are world famous, obviously, and that's just a way they're trying to win trust. And I think for me, this causes the exact opposite, to be honest. But maybe I'm too rational for this.
Something that I think might put people off as well is that they don't offer transfers in. I think they have a stocks and shares ISA, which you can transfer into, but the cash ISA you cannot transfer into. If a trading platform puts you off, we have other options available for you. Plum are offering 4.61% with a pretty hefty bonus for 12 months. We'll talk about that in a moment. Tembo are offering 4.3%. They don't offer transfers in, which might put people off, and that rate does drop down as well as a result of a bonus. Moneybox are offering 4.3% with up to 3 withdrawals per year. That is a 0.85% bonus. Hargreaves Lansdowne, another trading platform. Apologies, I said that was done. 4.26%. If you open a stocks and shares ISA, I believe, Jan, you can get up to £4,000 cash back. Is that right?
Yeah, that's a current promotion, so that can be insanely attractive.
And that would be a very large deposit, I imagine. That's not going to be 20k. They're not giving you that. Atom have an easy access ISA, 4.25%. You don't get transfers in with this one, but I do like it, Jan, because it's just very simple. There's no catches, nothing really to flag on that one. But that's from Atom. Just quickly want to talk about bonus rates, Jan, if that's okay, because I think this does catch people out. These are obviously artificially boosted rates that usually fall within, after 12 months. And, the industry are counting on people not realizing that the rate has fallen and then locking in and keeping your money, your deposit. Plum, for example, offering 4.61%. That's essentially a headline rate. That's really good. We know it's better than XTB across a year. And that includes a 2.54% bonus for a year. So that falls quite significantly. Yeah, and I just really want to stress to people that if you have got a bonus rate, set a reminder in your calendar for 11 months, not 12 months. 11 months. So you can spend some time looking for the next product, the next investment, and then have it ready to go as soon as that bonus ends.
If you use Deposit Scout, you'll do that in a few minutes. That's the beauty of it. But, it's another story. So we have a few interesting fixed rate cash ISAs as well. HSBC with a 1-year fixed cash ISA at 4.5%. Pretty attractive, if you ask me. That requires the HSBC current account though. Nationwide offers a 4.35% fixed ISA for a year. Tandem, 4.3%. Looking at 2 years and above, it gets actually slightly more attractive, which is fascinating. You got Chetwood Bank via Hargreaves Lansdowne, 4.55%. Nationwide, 4.4%. 3 years, you get Chetwood Bank also via Hargreaves Lansdowne, 4.5%. And if you're willing to commit your money for 5 years, Chetwood Bank also offers 4.55% and Nationwide 4.5%. And that's pretty attractive. I know it's a long time, right? 5 years, committing your money for 5 years is a decision that should not come lightly. That's of course, but getting 4.55% each year guaranteed for 5 years, I think that's quite privileged, especially if you think a decade back. We had super low interest rates, and people would have dreamed of something like that.
Do you believe, though, that now is the right time to be fixing? Let's have a quick conversation about the base rate and what the future looks like. Do you think fixing at this period of time would be wise?
I think absolutely, because you don't really know what's to come, and do you expect the interest rates to rise even further? We have economic instability. Maybe that's a little harsh way to call it, but there's some issues in the economy, right? It's not going as well as the politicians wanted. Yeah, it's unlikely that base rates will go up much further. If you're getting 4.55%, that's something that's already almost 1% above the current base rate.
Yes,
it's typically there would be 4 interest rate hikes, right, in order to reach that 1%, because they typically raise by 0.25 base points, and therefore I think it's a good decision. It's something I would personally be intrigued doing if I had this much of a if I was willing to take this much of a commitment with my fixed savings.
I think investors and economists are predicting potentially 1 rate raise this year. My approach would be probably to have half of my savings in an easy access and half in a fixed, and then only fix the money that I genuinely am okay with not being able to access. I think that's pretty obvious. Some of the fixed accounts that Jan's just talked about, like that HSBC fixed account, that is ultimately also a funnel into their bank, right? Just like XTB and eToro, because you got to get the current account. But you've got to get the current account. With Nationwide, I don't think you have to get a current account.
Then you want to get a credit card, and then you want to get the asset management offering, and then you want to get this and that, and then at some point you're within the whole HSBC ecosystem, and you're fully invested.
But that fixed ISA could be a good place to put money that you can afford to not have access to, and then have the remainder of your savings put into like an easy access savings account. That's the approach that I would take. I think we should quickly have a conversation about ISA transfers, because I appreciate that this can be a little bit confusing. Some of the providers we've talked about offer transfers, and then the likes of Tandem on this account that we've talked about and Atom and XTB aren't allowing transfers. So you can essentially transfer old ISAs into a new cash ISA without it counting against your current £20,000 allowance. One thing to note though, these transfer rates, so when you transfer to a new provider, sometimes the rate can be less. So for example, Plum, the new money rate is 4.61%, but if you transfer in, it's 4.08%. So and which product would you choose, mate, from all of the rates we've talked about?
eToro. 100%.
Okay.
Not the highest rate, right? That seems to be XTB at 6%, but 90-day boost expires, and then you're down to 4%. And to be honest, I feel much more comfortable using eToro at 4.78%. As long as you can stay within the £85,000 limit, and you can control your decisions, let's call it like that, it's probably the best option here. And it's flexible, so why would you care? Go in, and then you can just withdraw your money if you have to.
Yeah. Okay, so what cash ISA are you guys going to choose? Let us know in the comments. What do you think about some of the accounts we've talked about today? I'd love to hear your thoughts on these trading platforms as well, just owning the headline rates, XTB, Trading 212, and eToro. And a quick note on Trading 212, if you go directly to their website, Jan, I should have mentioned this earlier, it might only say 3.6%, but you have to do some Google searches to try and dig out like the promo rate. So if you're struggling to find that headline Trading 212 rate, go to depositscout.com. I've made sure that the table links to the landing page for the 4.62% rate. I had to just
just don't.
That.
Just use eToro. It's easier. Nice. Really. I don't like this. Offering 2 different rates. I'm not a fan of that personally.
No.
Yeah,
that's fine.
We've advertised Trading 212 in the past. We're a fan of the product in general, but I just don't like this, and I think it's right to call this out. Yeah,
well, let us know what you think of that as well. We'd love to hear from you in the comments. And as always, if you enjoyed the video, if you're listening and watching, please do. If you want to support us, like the video on YouTube, rate us on Apple, Spotify, give us 5 stars if you're feeling generous. We'd love your support. And I have nothing else to say, Jan, on that matter.
Johnny, should we mention that if people wanted to sign up with eToro or XTB, they can just use the link in the description?
Yeah, I didn't want to. Yeah, okay, I didn't want to be salesy, but yeah, no, I agree. He's right. If you want to support us and you do want to take out these accounts, we do have affiliate links for them in the description box. We'd really appreciate your support. If you want, you don't have to, but that is one way you could support us by going through the link in the description box to sign up for eToro or XTB. Well done, Jan, for mentioning that.
Thanks everyone for listening. It's been a pleasure as always, and see you in the next episode. Goodbye.
Goodbye.